Thank you. Panoro Minerals, we're a copper exploration company. We're focused on Peru. We've been working in Peru for 20 years. We've been working on our two main assets for the last 10 years, and our objective has always been to find, at the right time and at the right price, a buyer for the two assets. We see ourselves as an exploration company. We're well financed, so we're not looking to raise any money. I'll explain that to you. And we recently just published the results from the updated PEA on one of our projects. So we have two projects, both of them primarily copper, both in Peru. Cotabambas is a copper, gold, silver project that has some 700 million tons of resource, primarily copper, but with a good gold and silver byproduct. The second project is Antilla, which is a copper moly deposit, smaller scale, but as the new PEA showed, it's, I think, a real winner of a small-scale project. Our two projects aren't distinguished by grade. They aren't the highest grade projects. They're not the lowest grade projects either. Their average grades are about average. But really what distinguishes these two projects is their location and the likelihood that you can get a permit and build the mines. They're both located in south central Peru, where the last number of years, 4 different projects, $15 billion has been invested to build the expand the Cerro Verde mine by Freeport, to build the Constancia mine by Hudbay, to build the Las Bambas project by China Minmetals, and to build the Antapaccay project by Glencore. So because of all of that construction, the infrastructure is well in place. We have Hudbay Minerals is our largest shareholder. They own about 12% of our stock. We have a very unique streaming agreement with Silver Wheaton, demonstrating, Wheaton Precious Metals now, demonstrating the confidence that they have that Cotabambas should be one of the next copper projects to be built. We have $19.3 million of funding in place that covers all the work that we have planned for this year and for next. We're a $100 million market cap. We were about a $30 million market cap last summer. Since last summer, we've had a drilling program underway that has shown some good promise at the Cotabambas project. Plus, we recently, as I'll go over with you in a second, announced a new economic assessment. The copper market, I don't have to spend too much time on it. I'm sure everybody here understands, but what you see on the map, on the slide, is the last 30 years. And over the last 30 years, you can see 1, 2, 3 cycles. The cycles all supply side driven, same phenomena where higher copper price leads to more investment, but because of the long delays, that investment produces copper production at it all comes online during a short period of time. And that results in a surplus, which causes prices to go down, and investment goes down. And the argument that I think most of the industry is recognizing is that the last 2 years, the 60% or so increase in copper price is not a blip. It's a part of the new cycle, a cycle that's supply side driven. And I'd like to present you with the idea that as the world starts to deal with the lack of new supply of copper, the new mines that will be built, it's more than likely that a disproportionate number of those mines are built in Peru. In Peru, because of cheap power, plentiful water supply, lots of infrastructure, very positive treatment for the mining sector. But power and water will prove to be a key strategic advantage for the south of the country. In Peru, power costs tend to be half or less of what they are in the neighbor to the south, Chile. As a result of all of this, Peru's copper production has doubled from 2012 through to 2017. It doubled its copper production, and the projects that were built have been built by China, built by Japan, by American companies, Canadian companies. The whole world's been investing into the copper sector in Peru, and particularly in the southern part of the country. In this part of the country, that yellow line that you see is the access road that goes from our Cotabambas project to the port. If you drive that road, you'll pass $15 billion of investment into 4 new copper mines. And you'll also end up at a port that's been privatized and expanded, a railroad that's been privatized and is expanding now. And if you would have looked at this map 7 or 8 years ago, you would have found 4 or 5 different junior mining companies advancing copper assets. Well, in 2011, 2012, most of those assets were sold. And Panoro Minerals, we're the only junior company now with advanced assets in this part of the country. Back in the last market, we had only just started working on our projects. So we think that we're ready now for a good market. You can see some of the metrics on our 2 projects. Cotabambas is a 80,000 ton a day project. It right now has, at $3 copper, about a $700 million NPV, but it has a $1.5 billion capital cost. What we're doing at Cotabambas is drilling the other high-grade near-surface sulfide targets, plus the oxide targets in the vicinity of the resource. That will allow us, with not much more resource, to add 3 more years of high-grade mill feed, add a heap leach component to the project, and that we estimate could double the NPV of the project at the same metal price. The Antilla project that you see there, the metrics of which you see there, we just announced those on Monday. So it's a 20,000 ton a day open pit heap leach with a $250 million capital cost and a $305 million NPV. We essentially cut the capital cost in half by eliminating a concentrator and focusing the mine plan on the chalcosite. So we're going to be looking to move the partner of the Antilla project this year and take the capital from that sale and move it into Cotabambas, where we are drilling at the project, as I mentioned. Couple of key important components of the Cotabambas project. The C1 cash cost, $1.22 per pound, so it will be a low-cost producer. Plus the concentrate that it will produce is clean. There's no arsenic, there's no nasty negative elements in the concentrate. So it'll be a low-cost producer of clean concentrate. The area that we have drilled at Cotabambas is the area shown there called Cluster 1. That's where the additional drilling that we have going on right now, you can see is about $3 million that will be invested there this year. That's within Cluster 1. Second half of this year, we'll start drilling in Cluster 2, where we've discovered skarn mineralization. Skarns across quite a long surface expression. The geophysics indicates the potential for good continuity. So this year, we expect to add some very strategically important tons at the Cotabambas project that should permit a potential doubling of that project. The Antilla project, as I said, our plan with Antilla is to find a buyer for that project this year. It's $250 million capital, 3-year payback, produce 21,000 tons a year of copper in cathode in a very progressive jurisdiction, simple infrastructure, and we think that we'll find a buyer for that project this year and take the cash from the sale and put it into the feasibility study at Cotabambas. At the feasibility level, the Cotabambas project should be worth $700+ million. And that's benchmarked to the other assets that were sold in the region. So we're a $100 million market cap, and we feel that the Cotabambas project is on a track to a $700 million potential valuation. The only thing that's holding, the only risk factor ahead of us, we feel, is the financing of the feasibility study. And that's what we're going to use the Antilla project for. You can see we've got lots of money coming in with our agreements with Hudbay and with Wheaton Precious Metals. We have $5 million worth of warrants that are all in the money that expire in August. So we don't need to raise any money. We've got lots of projects. Antilla and Cotabambas are just about complete. And we'll then move on to the next phase of the company. So well-financed, 2 projects, and in a very important jurisdiction. Thank you very much.